Welcome back. So some scary market headlines lately. Market sell-off. Are you prepared for the inevitable stock market crash? The pros have seemingly ignored them along with all the geopolitical fears that we've had. But what about the retail investors? It's that time to check in for our monthly retail investor roundtable. Joining us this time around is Susan Noyes from MakeItBetter.net. And back with us is Thomas Vitkowski. Welcome to you both. And Thomas, first to you. Have you moved into cash? Have you put on some more defensive bets? How do you feel about markets here?
I moved down. I moved up my cash position. The last time I was on, I was 15 to 20%. I'm now closer to 25. The one thing that I do find interesting, though, is if you look at the Dow 30 stocks, 21 of them have underperformed the S&P, and 9 of them have actually lost for the year. So I'm taking a look at those, especially considering GE has been the worst performer in the year, and that was one of my holdings. So I actually added to that position recently.
Got it. So still seeing opportunity, even if a little more caution. Susan, what about you?
So I really invest for the long term, and for most of my stocks, I'm staying there. I'm not putting more in cash. I'm probably going to sell off Amazon because I really do think that if anybody's going to suffer in a tech bubble, that would be it, and they're a little bit too predatory for me.
So you think, Susan, you see a tech bubble out there?
Well, I don't know if there is or not, but it makes sense that there could be.
Want some reaction here from our panel, John?
Yeah, Thomas, I'm curious. You talk about moving a little bit more into cash. What's your strategy for getting back in, either if you prove to be wrong or if the market turns down? At which points are you planning to maybe buy back into equities?
I don't have an exact point in time. For example, in February, Travelers was the worst performing Dow stock, and I just thought it was a good opportunity, and I jumped in and I ended up making 15% on that trade over 3 months. Basically, if it drops to 190 on the Spider, that's probably when I'll put some more cash to work. And the reason why I haven't taken more stocks off the table is because I don't know where the top is. You know, the next 20 points could be up, the next 20 points could be down. I don't really know. So I still want to be long and have that exposure.
Rebecca, how does this line up with some of the institutions or some of the wealthier investors that you hear from, that you interact with?
Sure. I mean, one point that jumped out to me is that a lot of investors today point to the Dow it's been a lackluster year for markets. And it's interesting because the dispersion, the kind of gap, if you will, between the S&P and the Dow this year is incredibly wide. It's very unusual. And at some point that'll close. I think it'll probably get the Dow resolving higher. Now, if that happens, maybe we get a little more nervous. On the geopolitical fears, I just say that history tells us, and I don't mean to underplay the human element of this, but history tells us that geopolitical events normally provide buying opportunities.
Thomas and Susan, both, I'd like to know whether you, from your friends, colleagues, peers, hear more people talking about getting into the stock market, or is it the opposite, Thomas?
No, I think when you have the markets near the highs, that's when everyone starts asking me, what should I do, what should I do? And that may not necessarily be the best time.
Susan?
So I don't think that my friends think that we are near the highs, and everyone's still talking about how to invest and where to invest.
So that's got to be somewhat encouraging, Zachary.
All right, I have a very big question for a very small amount of time, but I'm just wondering for both of you, what do you do to try to separate the noise, and to some degree this is noise, it doesn't mean it's not intelligent noise, from substance that you feel that you can act on?
Susan?
So I actually try to take the long-term perspective and look for a long-term value and whether or not it feels like common sense to stay there.
And we should add, Susan, some of your holdings. Go ahead. Go ahead.
So that makes it easier for me to not listen to noise, because I'm not listening for 1 month or 2 months. I'm thinking about it for 1 year, 2 years, 10 years.
And your daughter's helped a little bit too.
Yeah, that's exactly right. She told me Michael Kors is going to be hot, and she was right.
Thomas, what about you?
It's stock specific. I want to see what the earnings are, what the news are, and if I feel comfortable with a stock, you know, Apple was down a lot when I had it in January, and I held on, and that ended up being pretty much the best call that I've made. You know, 45% since that point. So I want to look at the individual stocks, and if the news and the earnings are good there, I'm not going to sell.
I love it. Stock picking's not dead after all. Susan and Thomas, thank you both this afternoon. Have a great long weekend.
Thank you. You too.
Thank you, Kelly.
Appreciate it. Really appreciate it. Jay Leno is making the move from late night to prime time, and that's prime time here on CNBC. He's going to join us to tell us all about his new car collecting special, Jay Leno's Garage. That's next. And still to come, we head down to the Jersey Shore to ride the waves with our brave Morgan Brennan. Surfing is on the rise. So can you catch a good investment by hanging 10? That's just ahead.